Get to our political panel. With me, the former Liberal advisor David Gazzard, former Labor advisor Darrin Barnett. Gentlemen, great to see you both. Darrin, it really is a tough spot for the government in terms of economic management. We've seen the GDP number today slowing growth and the rate rises continue. Things are precarious.
They are. It's a delicate balancing act that they are seeking, and a mixture, obviously, of the Reserve Bank and government policy when it comes to IR and other matters. But the balancing act that they are trying to achieve is bringing in the inflation bubble and trying to moderate growth, but without crashing the economy. So it's a difficult act because the instruments are fairly blunt, and we obviously don't have a crystal ball of what the future look like. So what we do know, it's getting tougher to pay the mortgage, therefore consumer spending and discretionary spending has come in, but trying to balance that so that we don't have a shock of the nature where unemployment spikes and other, we have a recession. And it's a difficult balancing act. At the moment, it's on track, but as I say, crystal ball, no one quite knows what the future holds.
David, the RBA governor warning that the minimum wage increase in and of itself last week can be managed with appropriate productivity gains across the board. Wage rises are acceptable, but the productivity gains haven't been forthcoming. I asked the Treasurer about it earlier in the program. He says he takes a different view, that he believes that we need to be careful not to blame workers for expecting wage rises after a long period of wage stagnation.
Well, I don't really see how anyone's blaming workers in the first instance. It's not the workers' fault, and you can understand workers wanting a pay increase, particularly when they're struggling with the cost of living and interest rates continuing to rise. The big thing that this part of the cycle has had, which has been different from other cycles, is that unemployment has stayed relatively low. And with wage rises increasing to the point where business owners with discretionary spending coming down, it is highly likely that unemployment will start to rise. And this is where you'll start getting a real problem, because at that stage, people start foreclosing on the banks start foreclosing on mortgages because people don't have jobs to pay for them. And it feeds into a higher unemployment bill for the government, higher social services bill for the government, and more spending on unemployment. So it's a spiral, a dizzying spiral that starts and heads down. So I don't think anyone's in the middle of that is blaming the workers. They're sort of looking for a lead on deflationary policies. If you can manage the unemployment, or if you can manage the minimum wage rise, fine. The budget didn't add to inflation, but it certainly wasn't deflationary. But now you have the spectre of a looming patent bargaining display with new IR laws that are potentially coming in as part of a second wave of IR reform. So it is a very, very delicate time. I agree with Darrin on that, and there's a lot before the government to consider.